Hi, I'm Kep Kepner, CPA here in Dallas. I have in front of me an article from a columnist here in Dallas. His name is blah 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 blah. So, hi, this is Kep Kepner. I'm a CPA here in Dallas. I have in front of me a newspaper article from Scott Burns, who's a local writer, and he talks about finance and tax in his column. And he made some interesting observations that are important to all of us as business owners. We've heard plenty of rhetoric today from all of the presidential candidates about the tax rates. Oh, they're so high. I would change this. I would do a flat tax. I would have no tax. I would have a sales tax. All of these discussions are primarily rhetoric, because our income tax system is so built in to our system of financing our government and our individual system of how we decide to buy things, that the change dramatically would change all of the things about how our country has success. So the answer is, of course, well, let's tax the rich. Now, you've heard plenty of that, right? So let's think about this. The top 1% of the taxpayers by 2012 paid 38% of all the taxes paid. All of the taxes, think about that, from everybody, all 300 million of us in the United States, 38% of the taxes were paid by the top 1% of the income earners. Wow. So are we going to soak them for some more? I don't know. The top 10% are paying 70% of all the taxes. That means that 90% of the taxpayers in this country, 90% are only paying 30% of the taxes. So use this as an analysis tool when you hear about tax methods. For example, the flat tax. Well, isn't that great? Maybe the fat cats at 1% will only pay 20% and everybody else will only pay 20%. Well, maybe that sounds good if you're a fat cat. But if you're somebody getting by on the lower level of the income scale, or even a median income earner, that's going to be quite a cost to you and your family. Doesn't mean it shouldn't be that way. Oh, by the way, we already have a flat tax, and that's the Social Security tax. Now, maybe your employer is picking up part of it, but if you're self-employed and you have self-employed income, you have a tax right off the top of 15% for Social Security and Medicare, whether you get to the point of paying income tax or not. So when you pay a flat kind of tax, it's regressive. Regressive means that it hits everybody the same. So the lower income people pay a much higher percentage of their disposable income in tax. So let's say you're earning really good income. You're making a couple $100,000 a year. Isn't that great? So you get to retirement age and you get to draw Social Security. Isn't that great? Well, of course, part of that's probably going to be taxable, because if you're making that kind of income, you probably have some savings. You'll probably draw on retirement, and that'll cause not only that income, but your Social Security to be taxable. Do you think it's right for somebody making $10 million a year to receive that $30,000 of Social Security and Medicare? Well, you may think it's okay, you may not. But you need to bring this into your reality and think about how you pay taxes. Because continuing to tax the rich and tax the rich may sound really good, and eventually we will be back at 1958, where that tax was 91%. And they'll be paying a lot more than just their current 40% of the income taxes. They'll be paying 50%, and we'll be paying all the rest of it. So if you need help with a real logical, practical view of taxes, give us a call. We'll be glad to help. Thanks.